Good afternoon, traders. Today is April 9th, 2013. My name is Dan Pavilonis, Senior Broker at RJO Futures here in Chicago. This is Kevin Craney, Senior Broker, and Frank Cholly, Senior Broker. And we're going to discuss the crop production report coming out tomorrow, also with the USDA supply and demand. Tomorrow, April 10th at 11 a.m. Central Standard Time. And Kevin, what do you think about the report tomorrow?
Yeah, I think this report certainly it will not carry as much weight as maybe the quarterly stocks report we just had a few weeks ago. I think in terms of what we'll see on the report, coming off of that quarterly stocks report, we saw a lot more corn than we actually anticipated, and actually more wheat. So I think you are going to see an adjustment in that feed and residual use number. Which is going to be interesting to see in terms of just how much livestock is out there, what we've seen from some of those livestock reports, and considering corn has been at all-time high prices, how that really comes into the mix and really affects things going forward. But I don't think it's going to be as big an event as it is the weather right now. I think markets are really going to be watching weather more than they will be this report, as it's almost mid-April now, and we really don't have any field work done yet. So,
Frank, what do you think about the weather having an impact on these reports?
Well, I think that is absolutely where the focus is going to shift now. We did have a big surprise on the stocks in that March 28th report, and the market is still kind of reeling from that. And the question is, where do we go from here, obviously? And we will focus on the weather. I don't see any early harvest this year. We aren't to the point of it being a critical problem. The farmer is able to get a lot of work done in short order when he gets that window, but that opening is beginning to narrow a little bit. We are certainly a little bit behind, I would say. And we know that we're looking for a lot of acres, and it's going to depend on whether the weather conditions cooperate with that or not. I don't expect any surprises. Typically, this report is not one that gives us the fireworks that we see in a quarterly report. And we do have a kind of tight supply while we have more than what we were looking for. I think that was part of what added to the bearishness of this last report, is we're looking for a much tighter supply than what we got. These are still historically tight supplies, and they need to hold us over until the next harvest, which might be a little later, than August or September this year. So, yeah, weather is absolutely critical to affecting, the outcome of this coming supply. Very, very important.
Well, we had yesterday we had weekly corn exports, and they came in just at 10 million bushels, and that's the lowest it's been in 7 weeks, and it's below market expectations of 14 to 18 million bushels. Do you think that's kind of building supply, and is that going to have any effect on corn going forward?
Well, absolutely. The balance sheet is a constantly moving target there, and as we project early in the year where the usage is going to be, and feed is a much bigger part of it than the export sales. But yes, that has shown that we're using less in that area, at least, than what we anticipate or what we set aside for. And that's because the price of our corn was so high. So I guess in a way, the market's doing its job. Higher prices ration demand because we need to conserve, the tight supply. Again, do we take corn below $6 is, the question.
Yeah, well, and I think you hit on something that's important. The old crop that's left is still very tight. So the numbers that came off on this report, while it sent the market down, there's a lot of momentum down. The trend is clearly down. I think we all have to be cognizant that fundamentally there's still demand left to go for the current marketing year.
Right.
And so we have to keep that in mind and know that there's going to have to be some price rationing that's going to have to occur at some point, or the basis across the country is going to pick up considerably to try and get these farmers to move grain to market. And I think the latter may happen first, because I think a lot of elevators are covered, up until late April, maybe May, for a lot of their corn needs, anticipating that farmers are going to be in the field. But after that, it may be a tug of war. What's it really going to take to get cash grain out of the bin from farmers? And that in turn may move the futures a little bit here in the coming weeks if we start to see that basis tighten up, because it is a historically tight ending stocks number.
Right.
What do you, Kevin, what do you think about Argentina? I've been reading a lot of reports on their economic situation over there with the peso devaluing, their debt levels, and then also the farmers down there have said that their sales have slowed dramatically, and their weather's pretty good. They have a lot of crop. I mean, it's
It's interesting because the Argentine corn price really is still at a discount to the U.S. corn price, really. So one would think you'd still be pulling quite a bit of corn from that Argentina market, but you're really not seeing that. So I think that is a case of just demand being down a little bit from other countries. And certainly that may have something to do with the economic conditions, more outside macro forces. But I think when you consider just feed demand and things of that nature, I think that's what's keeping keeping that demand just a little bit lower over there in Argentina right now.
okay. What do you think, Frank?
Well, I think that the market does its job. As we're talking, when the price was too high, the opposite is true. When the price comes down enough, demand will come back to the market. And whether we see it out of Argentina, our corn is rarely the cheapest on the market. In fact, ours has been way overly priced. I would say partly due to the ethanol story. 40% of our crop going to ethanol, 40% of our crop going to feed, and roughly 10% to the export sales. That speaks volumes for how our prices spend so much time above $7. And the price comes down. So I think that it all kind of works itself out. The market will find a level where everybody's comfortable with it.
What do you think the play is for tomorrow?
Well, I do think it'll be very difficult to keep the momentum moving lower. The charts favor more downside. A lot of the traders out there are simply following trends, chasing trends. But it's going to take some bearish news to continue to move lower. I don't think that at this point old crop corn should dip below $6. If it does, it'll be short-lived.
I would agree with that. I don't think old crop can go below 6 and stay there for very long. They may try and test that level, but there's just not enough left to keep it below 6. I think probably another important one to look at is soybeans, particularly on the old crop. Just a tight ending stock number there, really tight ending stock. So if China or any other country comes in to try and secure some old crop soybeans at this point, we're really going to have to watch that. And another case, just like with the old crop corn, we're going to have to price ration at that point.
Do you think that the HN97 or the new bird flu, is that having any effect on it? I mean, 7 deaths already in China.
Yeah.
They're
think
starting to slow down.
More so with like soy meal, and some of the crush products, maybe a little more activity there than it does just the outright soybean side of it. Certainly it may pick up. China certainly has their own supply of beans that they sometimes release onto the market, so they may come in and actually do that. But a number of different factors to watch in that case to see if it does have an effect on any of the old crop prices.
Okay. Well, looking at the corn chart, I mean, 640, 630 seems to be a range where we've held ever since the last quarterly report. It looks like the market could find some support right there. If the number comes out a little bit bearish, or adding more supply, the market could obviously go below $6. But do you feel that it could fill that gap at about 670?
Yeah,
the market rallies back
the gap
up. I mean,
above seems like a long way off right now. But I'm a firm believer that
the market always
it's
fills
going
the
to
gaps.
happen, and,
Yeah.
and corn is good at covering gaps. And I think that it's a good possibility we get that filled if we start feeling, we got to build some weather premium into the market, I guess. And I think we've taken it all out. So I think at this point, at this level, this 625, 630 level for July corn. I think it is limited to the downside at this point, and that there's a better chance we fill that gap before we spend any amount of time below $6. That's my opinion.
I would agree. I'd like to see it start to base, and I think we are starting to see that. The 630 level is really a key level that it needs to try and hold. Maybe we dip below that for a short period of time, but I don't think we spend too much time below that because of the supply situation. But corn's great about going back and filling gaps on charts, so I would look for that to happen. Timing is just the key ingredient. So, but it's always real good about going back and trying to fill it.
All right. Well, I guess that's it. Going into the number tomorrow. Feel free to give us a call. Look us up on Twitter, Facebook, and remember, futures has a certain level of risk and is not suitable for all traders. So keep that in mind and give us a call.